In this video, I'd like to talk about the correlation factor between our indice markets along with gold. I think what we'll find is something a little bit interesting that may be useful for us when we're looking to try and trade. Okay, so down here we have a chart of the S&P futures with some moving averages. They're just basic exponential moving averages, 8, 13, or 13, 21, and then I believe this is the 34. And then down here we have the correlation study, which is built into ThinkOrSwim on a 10 period with GC as the futures that it's correlating against, right? So now if we take a look at the S&P, we can see that our correlation factor right now is right around a negative 0.49, which tells us that the correlation is in the bearish direction, but we're still below that 0.5, 50% correlation mark. So it's all right. Right now, if we go to the Nasdaq, we'll notice it's 44%, 48% right now. But if we take a look to see what that correlation factor has been at, say throughout the course of the day, you can see that at one point the correlation factor was increasing all the way up to right around a 75% zone, where gold and Nasdaq were really moving in tandem, right? And this is in the case where they're both moving in the bullish direction. Typically, we want to see this correlation factor be negative, which supports our theory of one's going up, one's going down. In this case, you see it's close to a 1.0, which tells you that not only was the Nasdaq going up during this period, so this is say between 7 to 8 a.m. Pacific, but if we take a look at gold, for our purposes, gold is going sideways. However, the correlation factor is 0.75 with this rally right here, right? And so let's focus in on that because I think that gives you some interesting information is when that correlation factor goes above a positive 0.5, which tells you something interesting or odd is happening. So that was this rally right here. If we take a look what happens after in terms of the gold futures, gold falls in to our moving averages and then bounces up from there. Very typical trend trade right here, right? And I would almost be willing to guess that there's a squeeze here if we do load in a squeeze, right? The basic squeeze, and you see that we do have, in fact, a pretty strong squeeze forming on that 3-minute chart as we chop sideways. So this would be that first area that you might say have been looking to go long gold. But what is our Nasdaq chart telling us? So now let's zoom in closer to that 715, 718 mark all the way to 742. Right? And we're trying to see what happens after 742. So now in the case of the NASDAQ futures, we get to 742, right? Whoops. We get to 742, so let's just draw a line right at that 745 candle. And you can see how the charts of the NASDAQ futures and the gold futures are substantially different after we have a fairly strong correlation signal. And that's while the NASDAQ was climbing higher, it then had a nice puke down lower versus gold, which continued to go in the same direction, right? Making gold the more trending market, making gold the easier market to trade, making the NASDAQ much more choppy, but also making that NASDAQ a nice fading opportunity, which we've seen so far on the NASDAQ charts using our aggressive volatility box, right? Now, if we load in that tool or that indicator, 745 mark takes us right near the edge of that volatility box. So the two signals overlapping, pretty nice correlation, pretty nice, or it gives you a high degree of confidence on this trade. Right, it is an edge of our entry. Keep that in mind. But then we see subsequently we chop sideways, see a nice edge arrow signal indicator, and then you get this nice puke down lower until you then once again hit our volatility box line, get that edge arrow signal indicator that gives you a nice bounce, chop sideways. You start to see a cluster, and if we zoom in or zoom out to see what's currently happening, we're now just chopping sideways, but our bias is based off of this cluster, which is a move up in the bullish direction, right? And then if we just go back to gold one more time to take a look to see what gold looks like on our aggressive volatility box, here you can see absolutely no entries, but our volatility has been fairly steady and gold has just been gradually rising higher. So what I think the interesting takeaway from this is that one period where our correlation started to go from that negative 0.5-ish zone, right? Anywhere from 0 to negative 0.75 is what we saw the range, all the way up from 0 to then 0.75. That then tells us something funny is happening. That took place really right in this time period right here, right? 715, 745. In the case of gold, that just looks like pretty average action. We're just climbing up higher. But in the case of the Nasdaq futures, we saw that this ended up becoming the turning point for the rest of the day, at least what we've seen so far. All right, hope this video helps. I think these patterns with correlation are pretty interesting, and you can then start to repeat the same exercise to try and find patterns off of the Russell, off of the S&P, off of the Dow, and even create custom signals that then use the correlation of gold to then give you signals on each of the other indice charts. All right, so that's an idea for our members, something that we may work on if it proves to continue to be interesting, and then it'll be something that we make available to you. All right, hope you all have a wonderful weekend ahead. Wanted to give a quick shout out to my co-founder Cody, who's getting married this weekend to the love of his life, who also happens to be a close childhood friend of myself. So it's going to be an exciting weekend for myself. A lot of Indian wedding festivities ahead. Hope you all are able to enjoy this weekend as well, and we'll see you in the next update. Take care, everyone.